Hello everyone, this is Elliott Wave Cafe. It's Saturday morning in Chicago. It's about 9 o'clock and welcome to Bitcoin and Ethereum Elliott Wave analysis. All right, so listen, it's been an interesting couple of weeks. Bitcoin remains in an uptrend here, and on the longer time frame, this is my main primary preferred count, where we've actually finished the cycle wave 1. Followed by a cycle wave 2. That's the longest correction that we've had ever since the inception of Bitcoin. And once we finished this move, we impulsively moved higher here in this wave 1. And I think what's happening right now, we are in the process of continuing in this larger wave 3 primary. So this wave 2 is a cycle, wave 3 cycle. And then in the middle of the cycle, we have this primary third wave. Now, the move have started after this correction completed. This was, let's say, back in April, May of this year. And since then, we're starting to impulsively move to the upside. So the longer count of Bitcoin remains higher. This is obviously a log scale. And it's clearly seen that you're making higher highs and higher lows in this progression. So we have to stay with this move and count it towards the bullish side. Now, there could be different variations where, this counts here might change a little bit depending on what price does, but the longer trend remains to the upside. So here is the next slide, where I'm actually diving down a little bit on the 2-day chart, where, we're looking at this 39.48 as being the low. And then we have finished the wave 1 sequence of those lows. The move from those highs here, since we have made a new all-time high in Bitcoin, not that long ago, makes this move here a corrective pattern. Now, you remember, we were a little bit worried that this could still be counted impulsively as long as you're not making new all-time highs. The moment you made new all-time highs, this move here has to be considered a corrective pattern. Now, the only way that you don't is by flipping and thinking that the tip of the wave 1 is here. This becomes a wave A, that's a B, and then you're doing a flat in a C wave. I tend to disagree with that approach due to the right look of that so-called, let's say, expanded flat or running flat, depending on kind of where this finished here. But I think it looks more as an expanded. So I don't necessarily like the look of this move, so I prefer to place the top of this move back here instead of here. So all I'm looking for when I'm counting waves and when I look at structures, I'm looking for that kind of right look perspective, which to me, it's one of the most important things that you can get besides identified between impulsive and corrective moves. That right look, it's one of the most important things that you can kind of grab and grasp when you're analyzing wave structures. So I've made a note here that says that this wave 2 can continue to develop. Above 65K, wave 3 has likely started, which is that wave 3 primary. Now, what do I mean by this wave 2 can continue to develop? Well, if this is a corrective move to the downside, and this wave 2 is not complete, then we got to look at this move to new highs as a corrective pattern. Now, there's only 2 types of moves that we can kind of get, since this is not an impulsive move anymore. We're looking at this, what's left in terms of corrections. We know we have zigzags, we have flats, and we have triangles. Well, if you cannot have a zigzag because you would break the rules, since this move made new all-time highs, then all you're left with, it's a flat and a triangle. So the way a flat move would look like would be something like this, where this is a move here in 3 waves. Then you're going up here in another 3 waves, and that becomes wave B of a flat. And then you sell lower in 5 waves, either as a running flat, if you're staying, above these levels, or as an expanded flat if you're moving a little bit lower. So that's what I mean by when I say this wave 2 can continue to develop. Now, it's still very, very early in this approach of thinking that this is it's a wave it's a flat in a wave 2 forming, right? And I always try to stay away as an Elliott wave analyst from assuming that until I have, way more evidence to confirm such a move. And usually that evidence only comes after this move already happens and you're getting the C wave decline. And I'm going to dive a little bit later in the presentation in a 12-hour chart and a 6-hour chart where I can show you a flat formation at a lower degree that I'm much more comfortable agreeing to it because it could be in its finished phase rather than anticipating that it's going to be a flat. So I know, and I've made videos about it, where people get excited when they see a 3-wave move here and then a move to new highs, and all of a sudden this is being counted as a flat. But I've learned lessons along the years that kept me kind of safe and on the right side of the market by letting this move actually happen and then counting this as a flat, because then I can freely take a long position and move to the upside. So that's kind of what I'm drawing the conclusions here, and just kind of I am okay with the flat happening from these levels, but I need to see it happen first, right? So there is a possibility there. How big of a probability it is, it's kind of hard to tell. I would be more inclined to maybe move to an idea where this could actually be a fourth wave. Now, if it is a fourth wave, it cannot be a second wave. We know that. And the way you would have a fourth wave in here, and I'll jump over to another slide here shortly, is that this is a wave A of a triangle. That's a wave B. You're going to get a wave C, a D, and an E, and then you're going to move higher. Now, obviously, this cannot be a second wave anymore, and it has to be a fourth, which means that we have to modify the structure that kind of started back here in a 1, 2, 3, 4, and 5. But I'll jump here shortly. But I just wanted to spend a little bit of time, explaining what do I mean by this wave 2 can continue to develop. Now, as my primary interpretation, I don't think that this is going to happen. I think that we're going to continue to push higher here, and this continues to build as an impulsive sequence, and you go 1, 2, maybe 3, 4, and 5. And I may be getting a little bit ahead of myself here, but I have slides prepared for you already. So let me just kind of take it one step at a time, and we'll jump over to the next slide here. So the next thing that I want you to watch a little bit is this monthly candles, because to me, they speak a lot of information. And even though this month of November obviously is not over yet, we still have a week here or so. It's still not giving you a lot of information in terms of necessarily turning bearish on the market. The previous month, the month of October, was a strong bullish month in here, which against some of the beliefs there and seasonality that the month of October would have been a bearish month. Here we are, the market kind of laughing to our face and just saying, no, I'm going to go bullish, just to kind of show you something different this time around. So as we know, the months of November and December, they're pretty bullish in crypto, and they're not really reacting as such so far. But there is nothing necessarily here that tells me that it's about to turn bearish. Now, if I am going to get, a big bearish engulfing in the month of October, where this market will move lower like that, and you're going to engulf this, or you're going to get more of a penetration of this candle, maybe even below halfway point of that candle, then I would have more of a reason to be worried about the month of December. But until then, I still think we remain in a clean uptrend. You have a nice bullish hammer back in here. And I don't know when this was, July, I think. And this month of October tells you that this trend is likely to continue. Also, you've had a failed bearish formation in here that obviously kind of failed to materialize to the downside. So instead the market turned bullish, and it continues to make higher highs and higher lows in these kind of monthly formations. And to me, this tells me that I got to stay with the larger trend and respect the market moving to the upside. So just a little bit on the candlestick reading. I do like when I see formations that look like this, right? I do like formations like this. So I'm always looking for, for little clues from the market, that you can have, major changes in the trend. Sometimes you get, little blips in here, right? Like that, and that doesn't necessarily, mean that you have a major change, but, the most obvious and the bigger ones are where you actually have, type of candle that actually engulfs the previous one, or you have a massive hammer, a massive rejection to the upside. Sometimes you get a shooting star, stuff like that. So let's jump over to the next slide. And here I wanted to spend just a few seconds here talking about the moving averages a little bit, and that this divergence that we've had in price, right? And you can see that the RSI kind of failed to move higher, or at least stay above that 70 level, continuing to to suggest that larger uptrend at hand, and instead we've actually corrected this divergence, and we haven't really come all the way to the 30 mark on the RSI on the daily. That might still happen, but for right now, we are kind of pulling lower a little bit, and we lost the 21-day moving average, which is something that we watch on a kind of shorter term basis, on a day-to-day basis, to see kind of where the trend is. And then you have something intermediate, which is the 50, which is something that we also lost into this advance. So this is a little bit of a negative sentiment towards price, because the moment you lose the 20 and the 55, at least on the intermediate trend, you're still thinking that you might still be in this corrective move to the downside. Now, the 200-day moving average, it's flat. It's been flat since June of this year, and we haven't really done much. We sold off, we went up. You've kind of had these temporary impulsive moves, but you're not actually heavily trending upwards in the price of Bitcoin. The fact that we've actually sold off on here, makes this thing kind of become even flatter. So you do want to see impulsive price action for this 200-day moving average to follow suit. So we haven't really sold off that much below it. We'll see if we can regain it. And basically, if you want to wait until you're retaking the 50-day moving average as a signal, and the 21-day, to reinitiate bullish positions, that's more of a safer bet, for example, than necessarily jumping into the market right now. Although if you go and take a look at the weekly charts, you are testing the 10-week moving average, which is another important indicator that I kind of watch on an even larger time frame. So, I just kind of wanted to show you this divergence. The fact that we're kind of resolving lower also makes me think, and usually you have divergences when you have a fifth wave move to the upside. And you'll see this when I will talk a little bit, later here about, the wave count structure at the smaller degree of trend. Because if you're looking at this as a 1, 2, 3, 4, and 5, you're actually, that fifth wave comes with a divergence and actually moving lower. Now, if this is a fifth wave, it's either wave 3 or a wave 1. Based on kind of the move that we have of these lows, and then this is the beginning of the correction. Let's say that could be an impulsive move in an A, you get a B and then another C low. We'll take a look here shortly, but I just kind of wanted to talk to you a little bit these moving averages. All right, let's jump over to the next slide, and back in here, I want to kind of bring you back to this red count that I have as an alternate move, where I'm coming back to that explanation, like how can this, be a 3-wave decline with a 3-wave move to new highs and be counted as a triangle? Well, you have to switch over kind of the whole count, from these lows, and look at this as an extended wave 1, which is the first large move in Bitcoin back in 2005. Then you're getting a second wave pullback. You get a wave 3 that's a little bit shorter than wave 1. And now you got to get a wave 5 that's even shorter than wave 3 to kind of keep those proportion and the rules of Elliott wave alive. Now, you cannot really get above the $400,000 move in this fifth wave, because then you would be breaking the rules. Even more, when you have a wave 1 extended, the Elliott wave principle teaches us that wave 5 actually travels as such. 5 plus 3 versus 1, it's about 61.8. So what you do is you take the move from this fifth wave, this is a cycle move, right? And you're measuring that all the way to the bottom of the wave 2, right? So you're going the whole wave 3 to wave 5, right? And you're measuring that against the wave 1. And, a standard projection of that move, it is the 61.8 of that wave 1 from wave 2, from the lower of the wave 2 to the top of the wave 5. And that comes in at about 112,000. So that's an ideal target. If this ends up being actually a fifth wave cycle, and then you're getting a bigger correction in Bitcoin. Right now, you can notice in here that I've also done this wave 5 cycle versus this wave 3 cycle, and I'm putting some, fibs there, some golden fibs, and you are looking at about a 618, which comes at about 63,000. You see that we're actually finding resistance up into those levels. So there could be something that can be said about, these kind of being respected here. Are you actually getting a top in the fifth wave up into these levels? It's hard to say, because you would actually have to take this fourth wave from here, move it all the way at these lows, where you have a wave 2. So you're looking at the 1, 2, 3, move that fourth wave here, and it's a 4, and then you're looking at the 1, 2, 3, 4, and, kind of an awkward fifth wave into the 618, and this whole move could be done, right? So there is a way to count this to, consider the move in Bitcoin completely finished, but I'm not presenting that because I don't think it makes a whole lot of sense in the way this kind of structure looks, and from what I'm seeing over, in the candlesticks, and, what you're seeing on the chain data, and, the institutions and the ETFs and all these things, I think they continue to point higher in the price of Bitcoin, not towards, a very large correction. Now, it doesn't mean that, Bitcoin needs to come, back to $10,000 or, anything like that, because even if you get a completed 5 wave, being on a log scale, those moves, are not going to be as deep. You're probably going to get a move, let's say, 50 to 60% down if that happens. But, anyway, it's anybody's guess. So let's jump over to the next slide. And here I wanted to dive a little bit on that kind of shorter term outlook, where I'm looking at the 1-day chart. From a wave 2 low back in here in its WXY corrective pattern, you're getting a 1, 2, 3, 4, and 5 in a wave 1. Nice zigzag here in this wave 2. And then you're pushing higher here, and you're beginning the next sequence. Now, this is a wave 2 minor, which means that at a higher degree, I still have a wave 1 intermediate. So if you know your Elliott wave, count, this is a primary, count on a wave 1. Then the subdivision there, it's a wave 1 intermediate, which you don't see in here, but it will be back at the top of this fifth wave. And then even lower than that, you're getting minor, and then you're getting the minute kind of move in here. So if this is a wave 3 minor that's still in progress, that means that this is a wave 1, 2, right? And so this is the wave minor. Then you're getting the minute wave in another 1, 2 out of here, and then you're pushing higher in this wave 3. So as you can see in here, I'm looking at this structure as a flat at the moment, and this being an A wave, this being a B to new highs, and this is a wave C. So now I have, a pretty good understanding and belief that this now could be counted as a flat, because the move, it's already kind of, finished. It has a right look. So I have reasons to count this as a flat. And, I'm actually having some nice, fib relationships between the wave B and the wave A, between the wave C and wave A. So, now I can come and say, yes, I think this could be a flat. Will it be? Remains to be seen. You would actually have to move above this B wave high and continue to push aggressively higher into this larger third wave. Now, what I've also done in here, I've also presented some fibs retracements from this low to this highs, just in case this move gets a little bit deeper. But I am watching also the bottom of this channel. I think, channels are another kind of very important tool that you're using along with the Elliott wave patterns, because, price tends to stay within these kind of boundaries. So you can kind of see what's impulsive, what's corrective, how it moves, right? And then you're making these channels. And the bottom of this channel comes in at about 52 to 72 at the moment. So if this move wants to extend a little bit lower, and this becomes maybe, let's say, wave A, or it's another ABC that's a little bit longer, the lows of these channels could get actually tested. Right now we've gone as low as, I think, 55, 600 or something. The 618 comes in at about 48,957. And, unless you're getting a very sharp move, by the time you're kind of getting that, you're actually breaking the channel. So, it's another thing that I'll be watching. And what I don't want to see actually is this move out of here get below this kind of wave 1. Because what they would do is, below the top of this wave 1, what they would do is they would kind of kill the impulsive structure, right? Then you would have to look at it as maybe a 1, 2, 1, 2, but you don't really want to get this second wave, too large in magnitude compared with the second wave in here. So let me jump over to the next slide here where I kind of dive in a little bit, even at a kind of lower degree. So you can see wave 1 minor, wave 2, then you get wave 1 minute in here, and you go in an ABC flat for a 1, 2, 3, a very small fourth wave and a fifth wave. That's finished at about 161.8 multiple of this wave A into this wave C. Now that's a little bit of an extended move in here, right? It's a little bit aggressive for a flat. So, and it's at the kind of the highest limits that I would like for a flat position. So if it is indeed a flat, I would want to see the market, climb out of here, start to get an impulsive move of these lows, give me a 3-wave setback in here, and then bounce back and move higher and make new all-time highs. So that's kind of what I'm looking for, from the price, right? That's the evidence that I'm looking to make sure that, I have a high degree of confidence in this move kind of being completed. Now, the other thing that I'm watching, it is, and I'm kind of going back to here, right, is that this wave 3, what if this wave 3, it's actually completed back into these, up here into these levels? And the way that will look is like this, right? You're moving in a wave 1, and then you're having a wave 2, 1, 2, 3, 4, 5, and that's your 3, right? And we're falling, let's say, into a fourth wave. As long as we're not closing below these levels, right there, this could become a fourth wave, and you're getting actually a smaller fifth wave in here. So this can be, let's say, either a zigzag, an ABC, and you could be done, although it would be a very small fourth wave. You can get into a triangle in here, something like that, right, that can continue to kind of move sideways. You're making a very small fifth wave in here, 1, 2, 3, 4, 5, and you're actually finishing that wave 1 at a lower degree. So if this is primary, that would be an intermediate wave 1, and then you're doing your ABC pullback for a second wave, and then you go to the upside. So there are several scenarios here. I'm watching them all. My primary remains what I have here into my Elliott Wave Cafe account, and our members and clients have access to this via the repository and Motive Wave. So every time I make a modification into this account, it automatically goes onto their screens, and they can see kind of what's going on and what's my primary count, because I use this as a EWC count, so everybody can see kind of where my mind is at the moment. And then, as we're getting more evidence, or less evidence, then some of these things can change, because the market continues to be, fluent, right? We just kind of have to go with the flow and make sure that we're, following the price and the counts, and then adjust if necessary. It's the best we can do. And that's what's nice about Elliott Wave. I've done actually a video that was a little bit aggressive, I think, a week ago about, discussing Elliott Wave art or scam. You can go ahead and check it, where I'm pretty passionate about talking, Elliott Waves and how, people are very, very quickly to dismiss this methodology because, it allows you to make changes. And I think if you're not flexible in your methodology, I think you could be in for a world of pain, because, rigidity in markets is not something that works to your advantage. So, when you have multiple options, you're trying to eliminate and go from the, least probable interpretation to the most probable interpretation, and then take it from there. That's the best you can do. So, kind of going back to discount, this is kind of some of the levels that we've had. I think this might look like a completed wave 5 already. If it wants to make one more low, I would not be surprised, right? There could be another fourth wave in here that we might be missing. So, and maybe that will be, let's say, a final test of this move, right? If you can notice, this fourth wave is kind of small. So let's say that maybe there's something else that's still happening in here like that. And then you're doing a 1, 2, 3, and 4, and then another move lower in a fifth wave to the trend line. You're tagging the trend line, and only then you're actually starting to move to the upside. So, there's still a little bit of room for Bitcoin, let's say, to sell lower if it wants to. But if it doesn't, then the first clue for me would be a move higher out of here, right? In 5 waves, a 3-wave setback, something like that. And that would be, an indication for me that it's maybe time to start buying Bitcoin, to look for a move higher here and a move to new all-time highs. And if this move is in 3 waves, then right? If it's just an ABC and you're starting to sell lower a little bit, then you start to say, I don't think this is breaking higher. I think, we're probably going to go more lower or sideways in that kind of triangle formation. So it's all about, it's all about evidence, and evidence comes with, every single leg that the market gives you, either as an impulse or as a correction. So let's see. Before I jump over to Ethereum, I wanted to show you something that's, fairly interesting. I'm watching this, on a regular basis because I think it's something important when you're looking at Bitcoin as being, a proxy for risk and something, that people accumulate and get, when they want to have, exposure to risk in the market, right? When you don't want to have exposure to risk, you may be buying bonds, or maybe you're buying dollar, maybe you're buying gold, right? But so far, Bitcoin has been proven, at least over the past several years, as being a proxy to risk, which means that people, tend to buy coins and tend to buy, things that, have a kind of an exponential growth that, have a higher volatility, right? That's when you look for risk. You're looking for something that moves in terms of a percentage basis, quite a lot. When you don't want to have risk, then you're buying something that doesn't move that much, right? And bonds don't really do it. And the dollar is kind of, let's say fairly stable. So you're pulling back and looking for a lower volatility asset. But as we know, Bitcoin is a high volatility right now. It's at about 90%. And then the other assets, are the S&P 500. And then, copper is also a pretty volatile asset. So what I'm doing here is I'm having an overlay of this, let's say 3 asset classes, where I'm looking at the S&P 500 in this green. Then I have copper in this, coppery color, I should say, right? This orange color. And then I have Bitcoin in this blue. So you can see how they're nicely following themselves along, and with little divergences here and there. Over the long term, these things continue to kind of trend together, and surprisingly, Bitcoin and copper are pretty well correlated. And every time the market is excited about the economy or whatever the markets get excited about, right? Stimulus and free money and stuff like that. You tend to see a move higher in copper. And, usually Bitcoin kind of follows through, and the S&P 500 as well. So you can see in here that copper, went up there to about, I think it was about 4 or almost 5, and it pulled back, and then not long after that, Bitcoin started to weaken as well. And, back in here, you could see as Bitcoin was not really confirming, let's say, the copper rally in there, Bitcoin was pulling back. And then not far after that, copper starting to move lower as well. Now, the S&P 500 was kind of on its world of its own, and it kind of continued to grind higher. And then they found a little bit of similarities, towards here in, between August and October of this year. And then we're starting to rally again, and, copper starting to move higher there, right? The end of October here. And Bitcoin did so as well, made new all-time highs along with the S&P 500. And then since, middle of October there, I think copper started to sell off, and Bitcoin created a divergence and then sells off again. Now I'm seeing a move back higher in copper, but nonetheless, it's pretty much sideways overall, but continue to watch it. I've talked about this in some of my previous videos, Bitcoin and Ethereum Elliott wave analysis. I don't, present this chart every single time, but it is a relationship that I'm watching in terms of risk, right? So if you're thinking that, Bitcoin is about to sell 80%, Bitcoin doesn't work in a vacuum anymore. I think it's gained its status as a large asset class in here, with a lot of the investors and a lot of institutions coming in. And it's going to trade a little bit different now. It's going to trade along with the rest of the asset classes. There's going to be correlations here. And in terms of the macro picture, we want to be aware of kind of what's happening into the other markets. So, if you're thinking that Bitcoin is going to sell 60 to 70%, that means that there might be a bigger crash coming into the stock market. Maybe copper is going to sell off. Well, you might get some COVID cases here. You might get some lockdowns. There might be another scare coming up. We don't know what's in the horizon. There could be wars. There could be a lot of things, but, you can always live in a world of fear, but as an investor, I kind of choose not to. You want to be safe, but at the same time, you want to be open to progress and to things actually, continuing to develop. And I think this, crypto field is very new and very exciting, and it can offer us a world of opportunity. So that's why, I'm trying to stay optimistic and stay bullish in my accounts and continue to, look at it from the, from the long side as much as possible. So let's jump over to the next slide in here. Oh, sorry guys, this is the middle. So come and visit us into the pro room. This is kind of what we're doing. We have this pro channel. We talk about Bitcoin, crypto. We have macro updates every single day. I have daily videos. We have, chart updates. The chat room is very, very, busy. We talk a lot about different things on there. If you like stocks, if you like options, I get involved in that a lot as well. There's a trade alerts channel, a stock channel. We have a learning one. There's a big course there that you can, if you subscribe, you can get it for like, I don't know, $89. It's my subscription for a month. This course, it's pretty detailed. So, if you make it in a month, then that is pretty cheap. So anyway, this is kind of what we're doing. Come and give us a try. Also, don't forget to subscribe to this video and, tell people about it, and hit the notification bell. And, I really appreciate you guys, coming back to see more of my rants in here. But anyway, let's just kind of continue to go and take a look at Ethereum. And Ethereum, it is, it still remains in a pretty strong uptrend. Now, it's a little bit younger than Bitcoin, and you don't have that kind of multiple wave scenario and more interpretations in terms of kind of where you are in the larger cycle. So since this was kind of a larger correction in Ethereum, I am looking at this as a wave 1, and this is a big wave 2 in here. And, the move from these lows, right, back in March of last year, to these highs, I'm looking at this as a wave 1 with a shorter wave 2. Remember, we're on a log scale here. So, the wave depth is not as obvious. And then, from here, we're looking at another 1, 2, and then a continuation higher in this trend. So this is a picture that I'm trying to follow on the longer time frame. You might say, well, does this really look like a wave 1? What if it's a wave 3? Well, if it's a wave 3, I have something prepared for that. And then this green count where, I'm switching this wave 2 instead of being, a larger cycle wave that terminated in March. It actually terminated back in 2019. I think this is 2008, the end of 2018. So in a 1, 2. Then another 1, 2, 3, right? That's a long wave here. And then you can go in a triangle 4th wave formation in here. Similar story like in Bitcoin, where this is a decline for a wave A. If you ask me, it's a little very kind of awkward A wave in here. Then you would go up in 3 waves in B, and you would come down in a C wave D and E, and you're kind of still moving sideways until, let's say the spring of next year. And more of a corrective pattern in here. But then you would get another move up here in this 5th wave that would finish up this larger 3rd. So in terms of its progression, I think Ethereum, it's a little bit early. It can get more subdivisions. It can get even more bullish than Bitcoin based on some of this, let's say, subdivisions in counts. So it's at a different stage, in its cycle versus Bitcoin. So is it younger? Right? And it kind of follows the same path as Bitcoin does. And Raoul Pal talks about this in some of his presentations and videos. And, that kind of matches also a little bit kind of the wave structure of Ethereum. So, this is, my other kind of secondary count that I'm watching, with the primary one being this move out of here in a 1, 2. Then you're looking for either 1, 2 being done or wave 2 at a lower degree still in formation for a continuation higher. So this is what I also wanted to show you on the candlestick patterns, right? We remain in this, ultra bullish trend in here. You're making higher highs, higher lows. You have a bunch of bullish candles, right? So the trend looks very nice and clean. And there is no arguing. I have too much respect for a market that continues to make higher highs, and for Ethereum showing me bullish candles, not to remain with it, right? An object in motion tends to stay in motion, and it's been doing pretty well since the spring of last year, and continues to show impulsive patterns in here. right? And the RSI is trending on the monthly basis. It looks pretty good in here. So I have no evidence to necessarily turn bearish on Ethereum. When I'm going to get a big candle, just like I've said in Bitcoin, right? A bearish engulfing or a big, spike followed by a reverse move lower, then you can say, well, I think Ethereum is entering into a larger bear market, something that could look like this, right? Or even something like that, right? That could take you, half a year to a year to correct. And then, then we'll see what happens if we're going to continue to push or not. But for right now, these from the candlestick look perspective, this continues to look pretty bullish. So I will look for opportunities to long Ethereum. Here is how it looks on a little bit on a smaller time frame. This is and I'll come back to this one, but this is a lower time frame here on a 6 hour, and that's the wave 2 low, and that's your wave 1 minor, followed by a second wave in here in this clean zigzag in an ABC. Then I'm looking at this as a 1 2 1 2, and then I have a third of a third here, a wave 4, and then I'm finishing a fifth wave to an ending diagonal, 1 2 3 4 and 5, or 5 of a larger third, which means that this is possibly a fourth wave. Now, you can notice that a second wave here was pretty, deep, let's say, right? The fourth wave, although it is a little bit, has a little bit of an impulsive look, I still want to consider this as being a viable interpretation, right? I've gotten questions even into my room, like, hey, how would you count this as a corrective pattern? Well, you could go in an A, B, and then down in C. It's a little bit ugly, I agree, but I have to respect the fact that you're actually bouncing, from a very strong support level. You're bouncing from a trend line in here. And, the count kind of makes sense also. So what's going on here? I'm getting spammed. From that perspective, I kind of like what I see, and we were talking, I think we actually had a live stream on Thursday. Our chat room has a live stream every single Thursday where we go for an hour and a half to 2 hours, and we kind of dive in a lot of altcoins, and we talk macro and stocks, and, a lot of altcoins and Bitcoin in detail, and, guys bringing questions, and we have a lot of fun kind of going back and forth, and, people share their screens, and, I can see counts and talk about it. So it's a kind of a fun couple of hours that we spend, every single Thursday, in looking at the counts, and we're actually, looking live at this move in Ethereum, and we were talking about, hey, you've got a pretty nice support line in here in Ethereum, right, at about 4,000. You have a little bit of a trend line, you have a pullback to a wave of a lower degree there, and it starts to look like, smells like a bullish move in here. Now, you don't necessarily have to go all the way to new all-time highs, but even for a trade, stuff like this, it's exciting, and you can jump in and, with a little bit of leverage, not much, but you can actually, make, quite a profitable position, looking, where you have opportunities in the market, right? It's better to buy it down here than to buy it somewhere where you're making new all-time highs, right? Because you already have a correction. Now, from these lows, you can notice that you have a little bit of an impulse. So what I will look for now, it is something that's going to do maybe something like this, where you're going to get, a little bit of a pullback in there in 3 waves. And then, let's see if we can get something like that, right? 3, 4, and 5. And then you can create a little bit of an inverted head and shoulder and move to new all-time highs. So that's kind of what I'm looking. Now, this fourth wave can still form, maybe becomes a larger triangle. What if I'm wrong here and the second wave actually moves sideways a little bit? So I'm allowing for that. But as long as you're not breaking below this trend line and this move, does not become, let's say, something like that, I have, quite a bit of confidence into this count, into this projection. And the other one is obviously just like in Bitcoin, that maybe this wave 3 here is completed in here, right? And then you would have a 1, 2, 3, and you can still do, let's say, a larger triangle formation in here, something like that. For example, as long as you're closing above this wave 1, it's very important, and this is this trend line back in here, then you can have this wave 3 move back in there, and you can still have, let's say, a 1, 2, 3, 4, 5 to finish off the move. So, I am cautiously bullish. I kind of continue to like what I see on the monthly charts. I like what I see on the counts in here. We're continuing to make higher highs and higher lows. This year, it's obviously a very, very important level, right? If you're starting to break below this, then you're looking at that larger triangle count that I show you on that green, and this is at about, I don't even know, 27 to 3, 3,000, between 27 and 3,000 in Ethereum, in case you're, let's say, breaking below those levels, right? Then this uptrend here starts to be very problematic at a larger scale, and then you're looking at more of a sideways move or maybe a larger correction. But for right now, this looks very good, and this could be a very good opportunity for Ethereum to move towards, 6,000 by the end of the year or something like that. So I just kind of wanted to run you through that. And then, I haven't talked about this in a while. I don't usually count the Bitcoin pairs because there's a lot of noise there. You have two very volatile assets, and one of them is Ethereum, the other one is Bitcoin. Right? They have a high volatility ranking, and the counts can get a lot of whips and a lot of moves that are very kind of not appropriate for Elliott wave structures. Right? You're trying to get the moves when one of the pairs or one of the denominators here, it's a stable currency, and that allows you to be able to perform better quality counts than when both assets are very volatile. And that kind of happens also in the currency market when you're trying to count, for example, yen versus euro, Aussie versus yen, Aussie versus Canadian dollar, stuff like that. But when you put it in perspective of the dollar with the rest of the currencies, things are a little bit clearer. So anyway, there's a little bit of an exception here in Ethereum Bitcoin because they're very large market caps, and they tend to their moves tend to be pretty solid, let's say. But one of my counts with this was a 1, 2, 3, 4, and 5. So you have this leading expanding diagonal followed by an ABC in here in a second. So you go in a 1, 2, then you go in another 1, 2 in here, 3, right, large 3, sideways in 4. Which you can argue it's nice because this was in terms of the guidelines of alternation, this was a second wave pullback, which was kind of sharp, and then you're getting a sideways move in Ethereum, which is, alternates with this sharp pullback, followed by maybe another push up higher. Now, just bear with me in here. What does this mean? Well, this means that if this was a wave 1, right, in here like this, there was a second, right? So you get in a 1, 2, 1, 2, let's say 3, sideways in 4, up in 5, right? That means the Ethereum can outperform here for a little bit. So you go 1, 2, 1, 2, 3, 4, 5, but that's only wave 3, right? Then you're getting another 4 in here, and then another 5, right? So overall, based on the structure, you can still stay bullish Ethereum versus Bitcoin, let's say, who knows, over the next year or so, because the market kind of shows you that it's got a tendency, or at least in terms of the, Elliott wave structure of this move, you have enough arguments to consider that this might continue to break to the upside, right? And this is a, kind of a very nice formation. You can even maybe go at it as a triangle if you really want to, in an A, B, C, D. Maybe you do a little E wave in here and then push higher. But don't expect too much from this move, because every time you're breaking out of a fourth wave, you're getting maybe a little push higher here in the fifth, and then you're going to fall back again, and then that ratio kind of, it goes back towards flat one more time. But I think we're getting closer into maybe a burst out of here, right, into this move. So might be a little bit of time still. I haven't put any time fibs on here, but it looks like it's kind of running its course. The next slide here that I have, guys, it is Bitcoin versus Ethereum, and this is in terms of performance. And back in here at the bottom, you can see Ethereum priced in Bitcoins in here, and it's been kind of sideways, right, since May, June of this year. And actually, most of the gains that Ethereum had versus Bitcoin actually happened all the way to the middle of May. That's why Ethereum, it's up about 484%, and Bitcoin is only up about 100%, because the half part of the year Ethereum really pushed higher. And actually the cross moved from 0.03 to 0.08, right? So it was a massive outperformance in Ethereum in the first 6 months, and then we're kind of starting to move sideways, and that relationship kind of starting to that relationship started to just move towards more of a flat line. And if you actually look, for the past 6 months, they're almost moving tick for tick, where, I think, Ethereum, it's like 50%, and Bitcoin is almost, kind of 47, or Bitcoin is 47 and Ethereum is 50, something like that, where they're very, very similar in terms of their performance over the past 6 months. So continue to watch this. I think it's a, interesting, just kind of gauge of the market to just see kind of who's stronger, who's weaker, and then what's the performance versus one versus the other. Because Ethereum leads a lot of the alts in there, and if you're looking for alts to perform, and I think obviously that these cross has to be taken into consideration. So guys, this is it. This is the end. Thank you a lot for watching. You can find me on Telegram, Elliott Wave Cafe. There is a public chat there, a public room as well. There is this premium room that I talked about. You can find me on Twitter, Elliott Cafe. Come and follow me over there. I only have about 350 subscribers. They're growing. I'm active once in a while. I'm not a super aggressive a Twitter guy, but I do present some charts and commentary and information out there every once in a while. But again, thank you for watching, and please subscribe to this channel. Hit the thumbs up button, tell your friends about it. Let's continue to grow in here. I really appreciate you, love you all, and I'll see you on the next one. Wow, this is a long one, 45 minutes. Hopefully you made it through. Bye bye.